crypto remains a threat, according to European Central Bank Chief Christine Lagarde, saying yesterday at the Bank for International Settlements Innovation Summit that crypto service providers are accomplices to circumventing Russia's sanctions, while also supporting a speedier creation for a digital euro. Joining us to discuss is Daniel Lacalle, chief economist at Madrid-based investment manager Tressis. Welcome, Daniel. Thank you for joining us. So this point about crypto being used by Russians to evade sanctions has been disputed by blockchain analytics firm Chainalysis, saying that there's no real evidence of that kind of volume being used in Russia. I wonder your take on, how is crypto being used by state treasuries at all oligarchs to evade sanctions? What's the greater impact they may have on the economy?
Certainly. First, we need to completely debunk the idea that cryptocurrencies are being used solely for purposes of avoiding sanctions, etc. If we know what is going on really, most of the oligarchs or the people that are trying to avoid sanctions, what they're truly using is either the Yuan, the Chinese currency, or gold. Cryptocurrencies are being used, and it is true, by the poor Russian citizens that have nothing to blame on in the country and in Ukraine to avoid the destruction of the purchasing power of the ruble. That is a completely different thing. What we need to understand is that the excuse of saying that cryptocurrencies are used to basically undertake illegal activities, etc., is completely debunked by reality. The reality is that what is going on right now is a currency war. This is the first time in history that we have seen sanctions that make a central bank be unable to access its own reserves, and therefore cryptocurrencies are basically being used to provide some level of support in terms of purchasing power to citizens that are seeing the ruble collapse.
Daniel, welcome back. One question that has come up with some economists that I've spoken to is a question of whether or not the U.S. dollar will ultimately it could potentially lose its status if that currency war continues, because it's the idea that, it served a function as a reserve currency, and if you can't access reserves, other countries will be reluctant to hold it going forward. Is that necessarily the case, first of all? And
I wouldn't say that the dollar is going to lose its reserve status because of the sanctions against Russia. But it is true that what we are seeing is that citizens all over the world and the media are starting to understand that the reserves of a central bank are not coins and bullions in a basement of a building, are swaps, are treasuries, are bonds, and that they can be sanctioned and certainly limited. And what I think, in any case, is that if anything, what other central banks might start to think about is the reality of how feeble the value of many fiat currencies is. For example, many of the people that are watching right now may have heard numerous times in previous years that the Russian ruble was the most gold-backed fiat currency in the world, and therefore it was very safe. Well, it's proven not to be. And ultimately, we're starting to redefine and understand that there's a completely different thing between what it is a reserve fiat currency and what is a gold-backed currency.
I think anybody who's traded the Russian ruble back in the 1990s would be really scared about trading it, considering it to be a stable currency. That said, you see more problems for Europe than the United States because of the sanctions. But was there any other way that it could have been avoided, the kind of economic hardship that will come to Europe because of the sanctions? Is there any other way that that some sort of punitive measure could have been taken against Russia economically without hurting the rest of Europe?
Yeah, it is true. States is a bit more shielded against the counter effect of sanctions on the European, but ultimately there are no winners. No, why? In which way is the United States losing from this situation? First, obviously, by inflation. It doesn't matter that the United States might be able to have less of an impact in the European Union. Inflation is exactly the same. Second, I think that also we need to understand that for the European Union, Russia is a very large trading partner. The impact of basically Russian sanctions usually mean that for each dollar of sanctions on the Russian economy, the European Union suffers about 20 cents. And obviously, it's not a direct correlation, but just to give an idea to the people that are watching. And the other thing that we need to understand is that the United States loses because it's a big trading partner of the European Union. So the impact ultimately is that the European Union, the Eurozone, is going to suffer and is suffering from the sanctions quite severely, not as severely as the Russian economy, which is collapsing with the plus 20% inflation and probably a slump in GDP of about 11-12% minimum. No? But obviously, there is a secondary impact for the United States. The United States is relatively shielded because it doesn't have significant exposure to Russia, but it has very important levels of exposure to the European Union and the Eurozone.
Daniel, meanwhile, we're seeing high correlations between Bitcoin and the S&P 500. I'm just curious what you make of that correlation and how you interpret it.
I've always said that cryptocurrencies are startup currencies. Ultimately, they behave as a financial asset similar to technology companies that are starting. Bitcoin is the most advanced in the process of becoming a currency. It's starting to be reserve of value, generalized means of payment, and a unit of measure in some countries and in some and numerous transactions. But it's still very far from being any of those three, which is what we would consider a stable and long-term currency. And what is going on with cryptocurrencies is simply that we have to understand that in the process of becoming real money, they will have the volatility in value relative to the dollar and relative to the euro that technology companies or that financial assets that are linked to technology would have. However, what I find interesting is that the correlation versus the S&P is very high. But in the meantime, people that don't live in countries with stable currencies like the euro or the US dollar, people in Argentina, people in Iran, people in Turkey, people in Russia, are not worried about the volatility of Bitcoin. They're worried about the volatility of their domestic currency.
So I'm wondering, as you talked about the sanctions, the impact on Europe, of course, and Russia, the devastating impact there, there's going to be a lot of difficulty in the supply chains as if it weren't already complicated by the pandemic. So are things going to be worse? Is GDP going to go down globally? Is that going to cause some sort of stagflation where we're seeing a limited output yet high inflation around the world because of all the money printing happening? And would you regard Bitcoin or other cryptocurrencies as a good store of value amid that uncertainty?
In the midterm, yes. Obviously, short term, cryptocurrencies are as volatile as bonds, as equities, and they're not a good hedge against inflation in countries that benefit from being having a stable currency, as I mentioned before. But the reality of the risk of stagflation that you just mentioned, which is a complete nightmare for an economy, because governments that are attached to a fiat currency know more or less how to manage inflation, and they know more or less how to manage deflation. They don't know how to manage stagflation. Stagflation is truly a problem because prices go up and yet the economy is not rising. So if you take money out of the system, you may create a financial crisis. And if you put money in the system, inflationary pressures go up. So that's where the most advanced cryptocurrencies may start to prove themselves to be a good stagflation hedge. Not an inflation hedge, but a stagflation hedge.